Today on Growing Idaho, mortgage rates are some of the lowest we've seen in a while. But while a lot of people have been waiting for this, it's still not helping housing affordability enough.
The Federal Open Market Committee decided to lower our policy interest rate by a 1/4 percentage point.
That was Federal Reserve Chair Jerome Powell at the Fed's latest meeting, announcing its second straight rate cut down to below 4%. Mortgage rates follow the lead of this benchmark rate, which is why Freddie Mac says the average rate on a 30-year mortgage is now at 6.22%. That's actually up a little over the past couple weeks, but down more than half a percentage point compared to last year. Lots of folks around here have been waiting for mortgage rates to start dropping like this. So with payments now more affordable thanks to those lower rates, it's a great time to buy or sell and the market is picking back up, right? Well, it really depends on where you are. Here are the Q3 numbers year over year according to the Intermountain MLS. In Ada County, we saw a spike in homes sold of 12%, while the median price grew by a little less than 3%. But in Canyon County and Twin Falls County, it was a different story. Home sales were down a little over 1%, and the median price was up a little more than 1%. You'd like to see all those numbers going up slowly and steadily. So what's going on here? Why aren't things looking better everywhere with those mortgage rates finally dropping? Again, these are third quarter numbers, so they're from right before the government shutdown, and it's the shutdown that's affecting the housing market more than the rates right now.
While activity in the housing sector remains weak. The shutdown of the federal government will weigh on economic activity while it persists, but these effects should reverse after the shutdown ends.
But the shutdown ending wouldn't be a housing affordability fix-all either. Despite no federal economic data for the last month because of the shutdown, other indicators show a weaker jobs market and higher inflation than anyone wants. And whether or not someone is employed and how much they're paying for everything else will have a big influence on what they can afford for housing. But to help, the Fed can just cut the rate again, right? Well, let's not plan on that.
In the committee's discussions at this meeting, there were strongly differing views about how to proceed in December. A further reduction in the policy rate at the December meeting is not a foregone conclusion. Far from it. Policy is not on a preset course.
So we'll stay tuned. That next meeting of the Federal Reserve is coming up December 9th.